Greetings. Welcome to my weekend market recap, 25th March 2023. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle superiorprofit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if options trading is suitable for you. I use the Q systems for my trading. All the Q components run on the Metastock platform and the technical analysis component runs on TradeStation as well. I'll be using both of these platforms in this webinar. Let's now start with a look at the global systems, global markets using live systems. First, Australia's All Ordinary. Before I start the analysis, I will give a spoiler alert. I'm not going to look for many trade setups. I may do some analysis, but looking at the market situation, I think it is better to wait to see where the market is going, up or down, before taking the next trade. I look at some trades, but that is the spoiler alert in advance. Let's now spend some time looking back at some of the Q signals and how they helped us to make profitable trading decisions at those times. One is the unique bearish headwind reversal signal that came at the very top in both weekly and daily. They came at the same time in All Ordinaries, the Australian index. How could you use that? One way would be to book profit or protect profit in existing long positions, and then if the checklist conditions were met, you could take a bearish headwind short trade. If you didn't take that, along the way you could look for other Q trade setups. That was then, and now we can see since the bearish headwind in the weekly chart, all the weekly candles had been in bearish color, bearish backdrop color. This week's candle color is also bearish, though the shape is somewhat indecisive. In the daily, price came to the watermark support. We had a nice rally from the previous anchor point after it displayed a bull release signal, which candle also turned bullish. Not only that, it flipped from magenta to bullish, so that was a traffic light reversal from bearish to bullish along with a bear release signal. Now at the same price level, price has stopped going down and we have multiple bull release signals, but we don't have a proper bullish shape candle yet. If next week we have a bullish shape candle either in yellow color or green color, then you may look for strong fundamental stocks to buy. In that case, the stop loss is expected to be narrow. For the index itself, the stop will be just below this double bottom, but I don't prefer to buy the index. Usually I like to drill down. You can do that using Q index. Drill down in real time, find the stronger fundamental stocks and then look for buy setups in them. All Ordinaries is at a double bottom. and my preferred trading direction is bullish if price goes up next week. Next, let's look at Japan's Topix index. In the last market recap, I showed that price went up from very near the daily memory trendline support and also the weekly memory trendline support. Looking at that, you could look to buy strong fundamental stocks right at the close of previous Friday. And because this would be a reversal setup, a bounce setup, the preferred instrument would be short put verticals, for example. Options vertical, short put verticals would be preferred. And if we did that, for the index itself, we are having some profit. The profit will come from time decay as well as from volatility reduction and a slight delta up move as well. Now, the index itself went up little bit, but if you bought strong fundamental stocks inside the index, they are expected to move up more and you would have a larger profit in the individual stocks. Right now, looking at the weekly candle, it is very indecisive. So I am not thinking of buying in the Australian market as of Friday's close. What I would like it to do, I would like it to actually calm down little bit, make a higher low. If that comes all the way to the trend line support and goes up from there, that is even better. Making a higher low and go up from there, that will give me a low risk entry point. Right now I'll avoid trading Topix. Let's see how is China CSI 300 index. And though I'm looking at different markets, different indexes, the same analysis is applicable to any liquid stock in any country, any market. CSI 300 in a longer term downtrend. In the daily also we have trend line resistance, two of them, no trend line support. It came to the lower boundary and recovered to the value area. If it now goes down and creates a magenta flow candle, that may signal a trend following short setup. That can happen from Monday itself, but I will prefer it goes up little bit, goes to the trend line resistance and then comes down. That will give me even lower risk and higher probability short setup. That will be a trend following short setup, possibly a flow short setup, and because there is a trend line resistance, it will also have elements of the bounce short setup that will give more power, more probability of success to the trade setup if that happens, if price goes to the trend line resistance and comes down from there. Right now I'll avoid trading in either direction. Next, Nifty 50 of India. This is bearish. Notice once again the bearish headwind in the weekly chart caught the very high, at which point it also created a false upside breakout. Daily is somewhere here, but when we had the bearish headwind in the weekly, we could protect profit in existing long positions, and then along the way, as Nifty 50 was coming down, you could have plenty of short setups. I can see some of them here also in the daily chart on the visible area. This should be a flow trend following short setup. Then this should be another flow trend following short setup day. This should be yet another trend following short setup day, and Friday is displaying another possible flow short setup. But see the difference between the previous three flow signals and the current setup. The previous three setups were near value area. We had significant distance to the lower boundary that gave us attractive reward versus the risk. The risk could be just above the recent high. Risk was narrow relative to the reward, and we would confidently take those trades. Now it is already near the lower boundary. Can we still take a short trade? I will not suggest taking a short trade in Nifty 50 itself because we have very disciplined approach. If we had taken these short trades, we already made significant profit. Why not stand aside now, at least for Nifty 50? However, as I mentioned repeatedly, I don't want to trade the Nifty index always or the USA index always. I can drill down into Nifty 50 using Q index, look for the weak fundamental stocks that are giving more attractive reward risk ratio and proper short setup. Looking at the market, I would like to short, but I would like to short one of those weak fundamental stocks with better reward risk ratio in the technical setup. That was one market where I am bearish, and let's look at UK's FTSE index. The weekly is very indecisive in shape. Friday's candle is also indecisive. So as of Friday's close, I will avoid taking any trade. If price can go up from here, that will create a higher low. And if we have a green traffic light candle, let's draw it in green traffic light candle next day, that may signal a low risk entry point in some of the stocks. But right now I'll avoid trading in either direction. The global markets are indecisive mostly, other than India market. Let's look at the global custom index that is part of Q global market breadth. Let's look at that using weekly daily. Here I see something interesting. I'm doing it live actually. I didn't have time to go through the market before this live session. The weekly is having a doji candle. It is having a bullish indecision at the low, and price stopped right at the trend line support. It is inside a triangle pattern in weekly, triangle created by trendline resistance and trendline support. So we are at the lower edge of a range. At the lower edge of a range, my preferred trading direction is always upward. So I'm going to look for a bullish trade. If I could trade it, I cannot trade it. It's a custom index in Q systems. But let's analyze it. The same technique can be applied to individual stocks. In the daily, I see a cluster of not one, of course, one is not a cluster, not two, not three, four bullish indecision at the low. 4 days, one after another. As I mentioned earlier, one is important. If we have a cluster of them together, that is something to be taken even more note of. And after that, I see we have created a low, but it can be a higher low if we have a green candle next week. That will signal a low risk entry point into strong fundamental underlying stocks. That is how I'm looking at the global custom index, and that is giving some hope of a bullish move from here in the global markets, excluding USA. Now let's look at USA market, and I will switch from Q Global on Metastock to Q Elite on TradeStation for that. There is a time to buy, there is a time to short, and there is a time to stand aside. And that third option is appropriate for the USA market now. Very mixed signal, probably not unexpected looking at the mixed messages coming from the Fed, coming from Treasury Secretary about what to do with the banking crisis subsequent to the Silicon Valley banks and few other banks' failures. The weekly candle is bearish in color but very indecisive in shape. In fact, 2 weeks of indecisive shape candles. Daily came up little bit from the trendline support. In fact, if you watch the video of the live session that I conducted at that time, that was the time to buy some of the stocks using the bounce setup. And as you saw that time, IWM also had a false downside breakout or a support from the trend line support, bounce from trend line support. That was the time to buy. Remember, lower edge of a triangle pattern is the point where we like to buy because the risk is very narrow and stocks would be oversold at that point. But now we are very close to trendline resistance. Though Friday's candle is very bullish, we have bullish flow as well. It is so close to the trendline resistance and weekly is so indecisive. I'm not going to buy at the close of Friday. However, we saw the global markets, the custom index, it is right at weekly longer term trendline support. There is a chance it will go up, and the markets are interconnected nowadays. USA is of course the biggest, largest, broadest, widest market. The world markets open earlier. The daytime starts first in Australia, then Japan, then China, then India, then UK, later in the USA. So if the market is positive, those markets may go up, the custom index may go up, and SPY may also break out of the trendline resistance. That will be the time to look for buy setups if it can break out of the trendline resistance. But because of the indecisiveness, I will not rely on intraday breakout. I will rather wait for a confirmed breakout at the close. Can I take an intraday breakout trade? Yes, but that I will enter using the precision entry 5 or 10 minutes chart. In the morning session, if the breakout is happening, then I'll use 5 minutes chart. In the afternoon session, I'll use 10 minutes and I will manage my trade during the day. That is a precision entry of swing trading. But if I want to enter near the close, then that will be safer, I think. Of course, if you are having access to the real-time charts, you could take an entry, but that will not be using daily chart, that will be using fine-tune chart. So I am not going to buy now. I'm going to wait to see if it can break out and then take long. But if it reverses from the trend line resistance, what will that show? That will show a reversal from the upper edge of a range. From upper edge reversal, that is a low risk shorting opportunity. So we may have both opportunities. I mean one of them coming true next week. What about QQQ? That was the strongest and is still the strongest. See the difference between the SPY and QQQ weekly charts. SPY was bearish for 2 weeks in a row, and we have QQQ bullish for 2 weeks in a row, though this current week is also indecisive in shape. And in daily, I see though price went up this week, it stopped right at the watermark resistance. If it once again attempts to go up and reverses from the watermark resistance, that will probably align with SPY trying to go up and reversing from the trend line resistance. If both of those reversals happen, then I will be even more confident to take shorts. On the other hand, if this watermark resistance is broken next week, that will probably align with the SPY trendline resistance also breaking, then I'll be more confident to take a bullish trade at that time. What about DIA? DIA is some distance away from the trendline resistance, so it will probably not break out before SPY or QQQ. So I'm not going to look for a DIA breakout long setup right now. Also, I'm not going to look for a DIA reversal short setup right now because the trendline resistance is some distance away. Weekly is looking similar to SPY, actually it's weaker than SPY. It had been so for a while. 2 weeks of indecisive shape candles and bearish color candles. So no trade setup, and I'm not looking to buy or short DIA next week as well as of today's analysis. And lastly, IWM small cap ETF. Let's look at the chart template that is available on Q Elite that shows the historical trend lines. There was a question from one gentleman, and I replied in email that actually for trading decisions these lines are not required. It only clutters the chart, but it is useful in this kind of webinars where instead of opening the video that I recorded at that time, that video is still on YouTube, but instead of opening the video and showing how I analyzed it at that time, I am able to look at the historical trend lines. They are not useful for trading decisions again, but they help in this kind of webinars. I mentioned a while ago that when SPY was going up from trendline support, at that time I anticipated a false downside breakout in QQQ, and that happened on this day. However, that day's candle shape was very indecisive. So I would not buy IWM. This is what I actually explained in the last market recap also. Yes, both IWM and SPY gave us bounce setup or false downside breakout come bounce setup from trendline support at this point on the same day, but SPY was much stronger. So if we wanted to trade any of the market ETFs, we would have traded SPY or the E-mini S&P 500 futures ETF. I traded that. I would not trade the weaker of the two market ETFs. We can see that it has been very erratic. Very erratic. Again, this is what I mentioned in the last market recap, and let's once again see gap down, very big gap down, then very big gap up, very big gap down, very big gap up, move down open, inside open, very big gap up, inside open but very sharp drop, very indecisive candle, and Friday it tried to recover. However, there is a trendline resistance very close. It's never a good idea to buy something when trendline resistance is nearby. However, looking at the now let's look back once again. Remember the global custom index chart, that is a trendline support. In weekly SPY chart, that may break out of a trendline resistance next week if the market is bullish. QQQ may break out of watermark resistance at that time, and IWM may break out of the trendline resistance at the same time. So three things may align: breakout in SPY, breakout in QQQ, breakout in IWM. And if that happens, if that breakout happens, then I'm okay to look for small cap stocks also for buying. If it reverses instead of breaking out, then I may not want to short, not at least IWM I will not short because it's already very low in the price pattern. If I now go back to weekly daily, it is below lower boundary, already dropped a lot, consolidating. A move down may not give me low risk short setup. The other ETFs, SPY and QQQ. QQQ is at near double top. That may end up being a double top. That will give very low risk, highly lucrative shorting opportunities if the market comes down. IWM will not give easy low risk shorting opportunities. However, individual small cap stocks may give that. In summary, all the market ETFs are very indecisive. We may have a breakout to the upside next week. We may have a reversal to the downside next week. So I'm going to wait for that. Now, having said that, I will again point out something that I pointed in last market recap also. We had a bullish headwind at this point. We know the headwinds work remarkably well. Not always, and it is not a trade setup. We have specific trade setup using the signal, but I am looking at the IWM chart now and seeing in daily after the previous bullish headwind, it had a massive up move. Now it stopped right at the same price level at the watermark created by that bullish headwind, and we had a bullish headwind last week, a bull release last week, and that price level is holding. It is in fact better that it tried to go down and then closed above the watermark on Friday, creating a false downside breakout. So if it can break out of the trendline resistance, there will be enough reasons to look for small cap stocks, fundamentally strong small cap stocks that are also giving proper buy setups. That means if the market goes up, I have extra reason to look for small cap buying opportunities. If it goes down, I am going to look for QQQ constituents, that is large cap, mega cap tech stocks, or S&P 500 constituents, that is large cap stocks. Shorting of those if the market goes up, and if the market, shorting of those large cap, mega cap techs or large caps in general if the market goes down, and if it goes up, I'll actually be quite happy to look for small cap stocks for buying because they are beaten down a lot. Those may give lucrative buy setups and the risk will be narrow. That is the market level view from the what I call external view. Looking at market ETFs, we could look at futures also. We could look at, let's have a look at the future. Sometimes they vary little bit and we have time this week, not a lot of value in looking at individual stocks. Let's look at the futures, see if they give us some additional information. In every market recap, I don't have time to look at the futures, but I do look at the futures for my own trading decisions. Well, I'm carrying this out live. Interesting, isn't it? What is interesting is, let's go back to SPY. Notice there is a trend line resistance in SPY. Whereas if I go to E-mini futures, that has no trend line resistance. We have series of bullish flow candles, also had support from the trend line support here. If it can go up from here, that may give a buy setup. Also notice SPY, the weekly was in bearish color, but ES is in neutral color. Let's look back again. SPY bearish color, futures neutral color, but both are very indecisive. What about NQ, Nasdaq futures? Still at the double top. If it comes down, that will give low risk shorting opportunities in large or mega cap tech stocks. YM, this is in fact closer to the trendline resistance. Dia was not, but it is closer to the trendline resistance for the futures, has a bullish headwind nearby. So if it breaks out, we can see the breakout will come in all the market indexes together. If it goes up, reversal will also come in all the market indexes together except IWM or Russell 2000 futures, RTY. Let's look at that. That will also have a reversal if market comes down, but is already so beaten down, it will be difficult to find low risk shorting opportunities. Now, if we look back to June of last year for Russell 2000 futures RTY, in the weekly chart, we see it tested the same price level second time and sharply went up. This is a weekly chart, so this price move is significant. So what I will like Russell 2000 to do is to come back to the same price level, create a triple bottom and then go up. That will give us even better entry point. The stocks are still the same mark, the stocks are same companies, but we'll be able to buy them at a lower price and lower risk entry points. Now let's see how far is that distance from near the closing to, let's say, this price point. Let's say this price point. I am reading it is just 4.5%. So it's not much. About 5% decline in Russell 2000 will take it to the June low, which was also tested successfully in October low last year. So I'll be very happy for Russell 2000 to come down that 5% and then go up. Now, if it breaks out, I am happy to buy, but I'll be happier to buy if this down move happens and then it bounces. See how I can anticipate the possibilities and I establish preference of some possibilities over others. And if that preferred possibility comes true, I am more confident in buying. Right now, I'll avoid buying. So the futures did not give us any different signals. It's the same signal that we saw in the market ETF. Sometimes they may give some extra insight, not this week. That was external view still. Now let's look at the market internal health check. Using Q Global Market Breadth, a single chart information, lot of information in a single chart, and none of these signals, colors are from a single stock. They are aggregate health check market breadth insight calculated from 6 elements, you may say. Nasdaq, NYSE as a whole, and then Russell 2000, S&P 500, Nasdaq 100, DJI, Dow Jones Industrials. data from all those indexes, constituent stocks are gathered, analyzed, and plotted as health check insight. And here I see, as I shared in the last market recap, signs of oversold nature. Percentage of stocks above 50-day moving average becomes oversold when it hits the lower threshold. That happened at this point, in fact. And since then, it's actually a bullish sign that though the external view is not showing that, the internal health check is showing that under the hood, the health is improving after being oversold at this point, which was quite some time ago, middle of March. Internal health in terms of percentage of stocks above 50-day moving average improving. That yellow line is making a move upward with higher high, higher low, not sharp move upward, but move upward. The other plot that shows overbought, oversold condition is 3-month new high low. That is oversold when it hits the lower band. That happened when the percentage of stocks of 50 MA also hit oversold condition. Since then, it improved. It came down again, but didn't hit the oversold level yet. If it goes up, it will create a higher low. If it comes down to the oversold level and goes up, that is even better. Both are going to signal possible buying situation. Also, if I look back, there was a bingo on this day, bingo on this day, the down magenta arrow designed by Mr. Ian Woodward, may him rest in peace, part of the Q Global Market Breadth. The bingo signals showed selling everything, even those of value, or throwing the baby out with bathwater. And interestingly, after those two bingos, price did not come down. And what is this price? This candle chart is a custom index built from all the constituent indexes. It shows how the overall market is doing. Interestingly, after bingo, it didn't go down, but we don't have a large accumulation count yet. What I am going to look for is a large accumulation count, which will come in green or cyan color, something like this or this or this. That is very useful to have at a market low. We don't have a large accumulation count yet. Or we could also look for an Eureka signal, green candle. Usually both of them will come together. If one comes first, that usually is the accumulation count. Tends to be little bit faster but very accurate representation of market direction changing. So what I am going to look for now in this market breadth total view is a large accumulation count, preferably 3, looking at the very oversold condition earlier, selling everything. So I would like to see at least 3 accumulation count, and Eureka may come at the same time. That will give us confidence, at least me confidence, to buy more stocks. Currently the internal health check is improving from oversold condition, but not out of the woods yet, but it is improving in terms of internal health check. What about growth versus value? That's actually going up. So growth stocks are doing better than value. And small cap versus large cap, of course we saw IWM was languishing, so small cap is doing poorly. If now IWM goes up, breaks out of the trendline resistance as we saw, maybe small cap will also go up, and if small cap growth goes up together, that will give many IBD or HSI style buy setups. But I am agnostic to that concept. I am okay to buy value stocks or growth stocks both, as you know. So I will wait for, I'm looking for rather, not wait for, but looking for a bullish accumulation count and or an Eureka signal to have more confidence in terms of internal health check. Let's look at the mega cap custom index. I will not look at all the charts of Q Global Market Breadth. Now we saw, remember we saw QQQ was near double top. If it reverses from there, that will give us low risk shorting opportunities. And I mentioned from that external view analysis that if the reversal happens, I am going to prefer shorting large or mega cap tech stocks. And now I am looking at a custom index that is mega cap tech stocks. And interestingly, this is also near the upper edge, but in this case, upper edge of a triangle pattern. You may say upper edge of a watermark resistance also, but it's more a triangle pattern. That resistance is coming from far away. Those are very effective resistances. So if QQQ reverses from watermark resistance, very likely the mega cap custom index will reverse from the trendline resistance, and that is confirming my analysis earlier that I will be happy if that happens to short some of the mega cap stocks, because the risk will be very narrow, and because it will be a reversal trade. For reversal trades, my preferred instrument is using options verticals. In this case, you could use long put vertical or short call vertical. The support is far away, so if it comes down, a short call vertical will be attractive. Time decay will be in our favor. Even if it comes down little bit, moves zigzag and goes up, by the time it breaks out of the trendline resistance, we will have significant time decay. So we will benefit, we will make a profit whether price goes down or moves sideways. That is the benefit of shorting options or shorting options verticals. So I will prefer to have short call verticals trade in the mega cap stocks, the appropriate mega cap stock, not all of them. I'll have to see the individual stocks charts, see which mega cap is also reversing from watermark or trendline resistance, and look for a short setup in that. On the other hand, if it breaks out to the upside, breaks out from trendline resistance, again that will align with the breakout of SPY, QQQ, IWM, all of them together. That will signal a buy point. Will I prefer to buy mega cap stocks? No, because the recent low is very far. The low risk entry opportunities may not be available so easily. I will again repeat, I'll prefer actually to buy small cap stocks on a breakout, because the risk will be lower and the potential profit will be very high. Those will give lucrative breakout setups. Not yet, market can go in either direction. I am getting ready with both the possibilities. What about technical breadth? Okay, before technical breadth, let's look at the sector industry stock advanced decline breadth, and that has some hopeful signs. Sector industry stock advanced decline breadth from 1 month to 1 day. The longer term periods, I call 1 month and 10-day periods are longer term, both were decidedly bearish, but medium term 5 days as well as short term 2 days and 1 day, both all of them, 3 of them have turned bullish. So from bearish it has turned bullish. I'm getting better with the drawings, isn't it? That will actually give a nice buying opportunity. Again, if next week continues to be green in these graphs, then that will align with the breakouts in multiple market indexes. Now let's look at the bucket analysis. Interestingly, 2 weeks ago, if you watch that market recap 2 weeks ago, that time the percentage of stocks in the lowest bucket that had hit almost 50%. I clearly remember. The videos are still on YouTube. 2 weeks ago I mentioned that next week it may hit 50%, and it did hit 50%. And then I as always mentioned, that is too oversold. Last week, what was this percentage? Last week it was about 18%. And now what is that percentage? Very low, very low, 0.7%. So from 50% of stocks being below lower boundary, 50% of S&P 1500 stocks being below lower boundary, it reduced to 20% and now only 0.7%. That's a huge improvement. What does it mean? It means that bucket analysis can help us pinpoint entry for reversal trades. These are not trend following long setups. It was very oversold. 50% of stocks were below lower Bollinger Band. So the reversal trades could be headwind long setup, it could be box long setup or bounce long setup. They were unlikely to be trend following long setup, certainly not trend following long setup, flow setup, not also pullback long setup, and unlikely to be breakout long setup also. So at the 50% level, you could look for reversal setups. At 18% level, you could look for reversal setups as well as probably some breakout setups. Now it has improved, but see the percentage of stocks below mid Bollinger Band. It is still a heavy percentage. So the market is still bearish. 76% of stocks are still below mid Bollinger Band, but it has improved a lot from the lower Bollinger Band level. The bucket analysis is very useful, and as of now, it is more on the bearish side, but not oversold. That is a good sign in a way, but that also says because the oversold condition has weared out, it is possible for the market to go down as well as it is possible for the market to go up. It's not so oversold that we are going to expect a oversold bounce only, or not only, meaning more likely. It's not oversold anymore. It can go either way. It is still bearish. If it goes down again, then we may look for flow trend following or pullback trend following short setups. It could also give bounce short setups. So there is a mixed signal again from sector, industry, stock market breadth that is bullish, but bucket analysis is still showing bearishness. And technical breadth, very useful. Let's look at the weekly balance of bulls and bears. That's actually turned bullish. If we look at all signals, 64% of stocks are giving bullish signals, about 2/3. That's bullish, and we see the bullishness in terms of strength as well as trend continuation as well as trend reversal. That is bullish, the weekly picture. Friday's picture, that is also bullish across all categories. Strength is slightly more bearish, that is because of large percentage of gap downs, 7.5%. Overall strength signals are slightly bearish, but see the reversals, 92% reversals are bullish, and the absolute number of reversals are much bigger than bullish reversals, are much more than bearish strength. So because of this absolute numbers, bullish reversal number is much more than bearish strength. The strength graph and the reversal graph taken together, they become very bullish. And trend continuation is also bullish. Interestingly, we have very unusually high large percentage of bullish headwinds in the daily interval. That is a very positive sign. If I have time, I may look at some of these stocks and see if some of them are fundamentally strong and are giving low risk entry point. Will I buy them right now? No, I like to see the market breaking out, all those 3-4 ETFs breaking out of their resistances, and then I may buy some of these stocks that were beaten down. They are showing bullish headwind means they were beaten down, and now giving possible reversal signal. I have 10 minutes. Why don't I do that? I'm not going to take any trade in the long direction unless I see the breakout, but let's try to be ready with some of the setups. Let's go for the headwind signals, flag for them 124 signals, and I'm going to carry out a fundamental analysis. I submitted a video based on a live session a few weeks ago that was on all the possible workflows, and I explained how to click all the different buttons to implement the workflows. I'm not going to discuss that again. What I'm going to do is, instead of opening these 124 charts one by one, I'm going to carry out their fundamental analysis using QVital. That way I can eliminate the stocks I don't want to buy anyway. I have the tools working in real time, so I'm able to buy the best candidates not only in terms of technicals but also fundamentals and industry strength. So I'm going to use Vital now. Vital is now retrieving data from Refinitiv for the 124 stocks that has possible headwind, that has headwind signal, maybe possible headwind long setup. Let's complete the fundamental data retrieval and scorecard calculation, then I will look for only fundamental stocks. Will I open their charts? No, I will also look for those fundamental stocks that are in strong industries. That will further shorten my list, and then last step I may open the charts. Let's look for 1-star fundamentally strong candidates, that is either great valuation or great earnings growth or condition, but I'm not going to open them yet. I'm going to look up their industry scorecard from QEdge. Based on Friday's data, I'm going to sort and look for only the top 20% of industries. I could also look for top 20% of accelerating industries. So these industries that I'm clicking now, they were weak earlier, but they are among the top 20% accelerating industries. So what I did, with a few clicks, I selected the strongest 20% as well as most accelerating 20% industries, and I want to go back to my stock scorecard. Now I am left with, see how many, 66. So starting with thousands of stocks, I got 124 stocks with bullish headwind. Then I looked at their fundamentals, shortened the list by choosing stocks that are either undervalued or having high earnings growth. Then I looked up those stocks industry strength, either best performing top 20% or most accelerating, came back to the stock list. Now I have only 66 stocks. Okay, let's look at those stocks now from QFinder. I'm going back to QFinder again. And let's sort by percentage change. Some of them are having high percentage change, and all of them are having possible headwind setup. And now remember, headwind signal comes at a low level in the price, but I also have this paint brush that shows that it is at a low level over longer term, that is pendulum or price extreme low. So let's do that. I still have 66 stocks. I don't want to look at 66 stocks. I see many of them are at price extreme low. Yes, I could buy the price extreme middle also, but there are so many price extreme low stocks. Why not just do a click? I'm not destroying any stocks. I can go back to the other stocks anyway. From 66, I'm now left with 47. Let's look at some of these stocks now. See how I did not open the charts quickly. I have all the tools. I'm filtering out, and that is very useful. Even more so if you are taking a decision, making a decision just before the close. You don't want to go through thousands, certainly not even hundreds of stocks. You want to shorten the list quickly and then look at the stocks. More more useful if you are identifying stocks near the market close to take the entry before market closes. Also useful if you are looking for entries using precision entry chart, of course, but the signals based on daily interval trade setups. You can do that at the opening of the market or near the close. After market close, you have time. You may go through hundreds of stocks if you wanted to. But I don't do that also. After market close also, I have the systems. I do a few clicks, and let's look at some of these stocks. Let's choose the stocks that went up by at least 4%. Now I'm opening them using charts. I could use Q Elite on TradeStation or Q Global on Metastock. Let's use Q Global for these few stocks. They all went up by at least 4%. I'm going to open the daily charts first. If I see it is attractive, then I will further look at their weekly, daily at a glance template and see how very fast I am eliminating candidates. PMT, the ticker symbol and the name is at the top. PMT has a bullish headwind, but it has a trend line resistance very close. So immediately I eliminate it, close the chart. Let me see if something looks interesting to me. Hope, HOPE, it's a bank. I will keep it and I'll come back to it using weekly daily, and I'll explain at that time why I kept this one. Okay, CADE, Cadence, also a bank. I'm going to keep this as well. There are some attractive signals in these charts. In fact, I'll read them out for you. You may have noticed them already as I'm flipping through the charts, but I will come back to them. CADE I'll keep. ONB, yes, I'm going to keep. It's also a bank. Interestingly, I'm doing this live and the three charts I kept so far are all banks. Okay, I'm not going to keep it. Close this one, close this one, close this one, close this one, close this one. Mostly I'm closing because there is one or more trend line resistance nearby. Okay, I am back to hope. Now let's look at it using weekly daily template. Very good, very nice, isn't it? Lovely, in fact. No trade is guaranteed at the point when we enter it, but see, I look for bullish headwinds that came at a very low price point. I further looked for stocks going up from price extreme low. That is a long term low price point. So swing low as well as a long term low price point. Then we have this unique bullish headwind signal. Why did I keep it but not all the others? Because it also came to jump thrust low. Then suddenly at the jump thrust low at price extreme low, it displayed big move up 3. That's a very reliable signal to buy a strong fundamental stock, and this is also strong fundamental. We selected in that way either in terms of valuation or in terms of earnings growth. Now see weekly, it also has a bullish headwind. Even in the weekly it is at price extreme low. Even in the weekly it came to jump thrust low, then it displayed a big move up 3. That pattern is very reliable and the risk is narrow. Stop will be just below this recent low. And if options are liquid, then I prefer to trade this with short put verticals. So hope is looking is giving hope basically. HOPE, hope is giving hope. And because all the stocks I saved, actually I want to come back to these stocks. Look at their single stock scorecard later. Let me save it in QElite. All these happen to be banks. That's also positive. Probably because of the banking crisis, many stocks came down a lot. Panic selling was there. We saw that from Bingo coming in market breadth. Now if banks recover, the market may also very nice. Hope gave us hope, and CADE cadence is giving very similar, almost identical signal. We looked for bullish headwind in daily at price extreme low. In fact, it is price extreme low and reversing now. It is also like hope. It's another stock but looking very similar. This is CADE, Cadence Bank. Also displayed bullish headwind in weekly. Bullish headwind in daily, bullish headwind in weekly. Jump thrust low in daily, then came big move up 3. Oh, what am I doing? Sorry, I'm looking at daily in both. I'm sorry about that. I have to go back to hope also. So for CAD, I think because of my metastock setting, I was opening not with daily, not with weekly daily, but daily both. Okay, okay. So now it is not so nice. Okay, let's revisit. That's good actually. That's good. That's good. It's also good to know when the bullish headwind itself is not enough. The signal itself is not enough to buy. I am applying the checklist conditions in my mind. For taking the bullish headwind long trade, we need the weekly to be either bullish in shape or at least yellow in color. None of them are true. So we have a bullish headwind signal but no bullish headwind long setup. So I am not going to buy as of Friday's close. When I was looking at weekly also with daily interval, then I thought I could buy at the close on Friday, but that was a mistake. Using proper intervals, weekly, daily, using the unambiguous checklist, I don't have a buy setup as of Friday's close. What about hope? Let's go back. Hope also I need to look at it with the proper intervals. Here also we have the daily signal, but the weekly is not meeting the checklist conditions. So I don't have a buy setup in hope also. So well, the hope that I was getting by looking at the stocks, I'm doing this analysis slide, that is not there so far. Let's look at the last stock, ONB, also a bank. I have to, this time I'll remember to change it to weekly. In fact, that is a setup in MetaStock. This is also not meeting the checklist conditions. Yes, there are positive signals, but we don't have a proper setup. In fact, that's good. When I completed the analysis of these few stocks that are being bullish on Friday in terms of technical move, fundamentals are strong, industry strong, but we don't have a trade setup. That's aligned with the market level analysis that I did earlier, that it is probably safer to wait. If the market ETFs break to the upside, then I think we'll have plenty of such fundamentally strong stocks to buy. And I will end by, let's look at Hope's fundamental single chart, single page scorecard, Hope, HOPE. I know it is either undervalued or having high earnings growth. That's how I selected it from the stock scorecard. Let's look at the single page scorecard for at least this one stock using QVital. See how I am using QVital. Last time I used QVital to calculate the scorecard of multiple stocks. What were those stocks? Those were 124 stocks giving technical headwind signal. And now I'm using a root stock, Hope, to not only calculate its scorecard but also do a peer analysis. So it is retrieving the peers now. Let it do the work. After retrieving the pairs, it will calculate the pair analysis scorecard. Give it a few seconds. While it is doing that, let me also show you. You probably know, I also know, I missed that. The setup in Metastock that was resulting in weekly, daily, both coming as daily. Let's open Hope with daily chart first. Hope.o. How I opened weekly daily was to right click, apply template. I selected the at a glance weekly daily, but sorry, I selected the at a glance weekly daily, but see this checkbox, use templates periodicity, that was unchecked. It should be checked. All these Q templates have a built-in interval. If I had checked it, as I am doing now, and then apply the weekly daily at a glance, it would have opened weekly and daily with those intervals like now, weekly and daily. So that was my mistake during the live session. Let's go back to the still retrieving data for Hope's peer stocks, but that's fine. We can see that it is undervalued. Valuation secondary is also undervalued. Earnings quality is very good. Steady earnings quality has an attractive dividend yield. Yes, interest rate is going up, but still almost 5.5% dividend is not to be neglected. Company makes money, of course, it's a bank. Insiders are buying. See how I'm instantly able to pick up the useful information. I'm looking for bullish trade, so my eyes are automatically going to the green and cyan parts, not the red parts. Insiders are also buying. It is taking a while, that's fine. I am not going to look for any trade setup anyway. That was my starting statement. Let's end today's session here. Market may go either way, and we'll know that in real time using the Q systems. And just like I showed Q Finder list of stocks giving possible trade setups, we can find those in real time during market hours on Monday or any day. So we will be able to find them in real time and trade them. I will wait to see whether the breakouts are happening in the indexes or reversals are happening and trade accordingly. Thanks a lot again for joining me this week. I look forward to seeing you in my next weekend market recap. I'll announce the date and time on Twitter as always. Have a great weekend, and as these live examples show, there is no reason, as I always say, there is no reason not to do that. Trade profitably. Thank you.